So, as I mentioned previously, come back in another week or two after I evaluate all of my numbers for 2024 so that I can share those with you and teach you and reintroduce the entire process of reverse engineering so that you can have clarity at the end of your financial year to determine what kinds of things you did well and perhaps things that you may want to change for next year. If you've watched my episodes 1 through 62, you know that on Fridays I used to say, "Show me the money." Do you remember? And that was at the end of almost every year in the past that I would look at my spreadsheets and I would share with you what my numbers were from the beginning balance to the ending balance. I would also calculate what I thought the S&P 500 performance was, or in fact I would know what the performance is, and then I would back into my own asset allocation to determine how well I did, and then finally I would, in a sense, back out or calculate the result of putting in X amount of dollars into my savings and investing every year. So, for example, over the past 5 years, you guys know that I've been saving approximately $60,000 to $65,000 per year. That's about 70% of my income, approximately. So when you do your beginning balance and you say I'm putting in $60,000 and I know my ending balance, what would the interest rate be to get to that number? Now remember, I always like to say that that middle number includes interest, dividends, and unrealized gains. More on that a little bit later. And as you will see, 2024, just like 2023, was an amazing year. So for you guys, as you've been saving your money this year, you will also look back at 2024 and say to yourself, it was a good year in the stock market. In fact, it was a great year. Now, how well you performed determines the outcome. The S&P 500 could do really well, but if you did not do well, that could negate all of those potential wins for the year, if that makes sense. So in an interesting way, it's almost like when you work for a corporation, they take into account how well did the company do, how well did your department do, and how well did you do in order to determine the outcome. So hopefully you guys did very well. So on to the content of today's episode. I want to expand a little bit on what I mentioned in an episode or two back. I had a question from one of my subscribers that talked about flexible income, that he or she was completing their 2025 budget, but they were running into a problem in that they weren't really sure how to complete their budget and release it on January 1st, given the fact that they had a flexible income. So you don't want to place unnecessary stress on yourself when creating a budget if you have a flexible income. Many people have irregular compensation. It could be that perhaps you're a freelancer. Maybe you're a sales professional, like I think this person is. Maybe you are a contract worker. So it's important to determine the right budgeting method in order to complete your budget if you can't nail down your true income. And it's actually a good problem to have, as you'll see as I talk through this today. For myself, I can relate to it on some level because I always knew every year what my income was. I have a salary, or I had a salary, I should say, coming up next year because I'm going to retire, as you know, on January 10th. But I always knew what my salary was after we would get a little bit of an increase. The wild card for me was always my bonus. And I remember years ago, I used to include my bonus forecast as part of my operating budget in terms of money that I needed to pay my true expenses. But then as I started making more and more money, I changed the mindset of that, and it was no longer needed as a true expense, luckily, and it shouldn't be, or to pay for or fund a true expense, I should say, because it really is a wild card. It was never promised that my company would give us a bonus. And yet, when I looked at the past 5 years of being with the company, and then it became 10 years, and then 15, and then 20, and then 25, there was never a year where we did not get a bonus except for 1 year, and that was after 9/11. So this goes back to 2002. I remember the company did not give bonuses, or maybe it was 2003. I think it was 2003. The same year that my company went through a reduction in force. My job was eliminated, as many of you know. But then they offered the job to me that I'm in currently today and have been for all of these years. So for me then, it was an easier budget because, again, I knew what my income was. I just had to maybe forecast the bonus, and I always forecasted the bonus as being lower than it really turned out to be. Every single year, I remember that I would be pleasantly surprised that the bonus would be 1,000 more maybe, or a little bit more than that. So I would just add that to the budget. Better to under evaluate or forecast than to over forecast income. So let's then switch gears and talk about then, for this person and for all of you that may have flexible income in 2025, how should you really think about that? Well, the first thing I want to say is that you really need to be the chief executive officer of yourself. All of you are the chief executive officers of this little corporation that you are running, which is you. You are the corporation. Your operating budget should be treated as though it is the biggest thing ever, like you are this huge organization. Just like the company that you may work for, or maybe you're a freelancer, or a sales professional, or a contract worker, as I mentioned, they have people really looking at really large numbers when it comes to these corporations, right? So I want you to change that mindset for yourself and say, I am a corporation in and of myself. I'm working for a company. I get income. What I do with that income is up to me, and that is what your budget is all about. So, obviously the basics of creating a budget, you want to make sure that you have all of your expenses nailed down first, which I'm sure this person has done. And then in your Excel document, remember, you have different columns, one for in and one for out. The out column, you build in a macro to make sure that each month of the year, January, February, March, April, May, June, July, all adds up. And then it equals the out column. But it's this in column on the spreadsheet that this person is considering as far as what numbers would they put in there. So again, for me, it was easy. I would just take my net paycheck and multiply it by 26 pay periods, and then that would be the number. Then I would forecast my bonus net after 30% taxes and put that number on the spreadsheet as well. And you don't want to do one number, you want to do two numbers. Make sure you itemize, because it's all going to net down here anyway at the very very bottom. So what you do with all these other line items nets to the same number at the bottom. You want to make sure that you have an audit trail for your income as well as your outgo, obviously, right? So what I would do is I would say 26 pay periods net after taxes and also after whatever percentage I had going into my 401k at that time. So you can track that on another tab on the spreadsheet to get your true savings and investing numbers per se, but from your operating budget, which means after taxes and after whatever you put into either a pre or post-tax bucket, such as a 401k, would be that number. So for this person then, what I think I would do and what I learned many years ago, as I alluded to a couple weeks ago on an episode, I think it was, you guys know my story. I sat and watched the Susie Orman show on CNBC on a Saturday night for 15 years or more. I would record it. I would not miss one episode because that can be committed to personal finance over 2 decades. And I distinctly remember her talking about people that have flexible income. And I remember her saying that the best thing to do would be, and I don't know if this represents the person that wrote in, but if you've had flexible income, let's say over 3 years, then take the average of those 3 years as your number for 2025. Let me give you an example. If, for example, in 2022 you earned $70,000, then you could record that number. In 2023, $90,000, record that number. 2024, $60,000, record that number. If you add those up and divide it by the 3 years, you get $220,000. Or $73,000. I'm sorry. Wait, if you add it all up, you get $220,000 divided by 3 years, you get $73,000 on average as your income. And then you can break it down from there, which would be about $6,000 a month. Then if you take out $1,500 for tax, maybe $300 to $400 for the 401k contribution, you could get to about $4,000 to $4,100 as a net for your total 12-month budget as the number that you would record. Well, it would be 4,000 times 12 actually, which is what? Oh my goodness. It would be about 48,000 then, the 4,000 times 12. So you could record the 48,000. Now, what's nice about that is that you took an average of those 3 years, but what if this person that wrote in, if you don't have that kind of history over the past several years, then I would take the lowest number possible. Take the lowest number possible and try to build the baseline of your budget or your beginning budget with the lowest number possible. And as I alluded to in the previous episode, that's kind of like what I'm doing as a first-year retiree. I'm not looking at income per se. I'm saying what is the lowest amount of money I would likely spend in a year. And then you can always go up. But I wanted to know what was that lowest number. And I think then for somebody that has flexible income, you would definitely want to keep it as low as possible. So what that means then, as you go throughout the year, January, February, March, April, May, June, maybe at the halfway point, you could reevaluate the number that you placed on the spreadsheet. And if you felt comfortable, you could update it then and add in another in amount. And then place that and earmark those funds in a bucket on the Excel document to figure out what to do with it a little bit later. I don't think at 6 months I don't think I would do anything with that money right then as far as putting into investments, because I would want to wait another 6 months to see what happens. Because what if you all of a sudden had a really good 6 months but then a bad 6 months? And if you invested that money, you can't really take it back out, if that makes sense, because money that you may put as a lump sum into your investment accounts, whether you have a taxable account or if you want to put it into your 401k and try to max that out, or a regular Roth IRA, then it's kind of like a done deal. You wouldn't want to take that money back out. So I probably keep it in the Excel document so you can see it. And every time you open up the document, you can see, oh wow, I have an extra $3,000 or $4,000 there as income for these set of months. But I wouldn't settle until the end of those 12 months, because you don't know again what's going to happen in this, July through December. It's kind of like, as you guys know, if you've been watching my episodes, how I'm qualifying for health care, right? Do you remember me saying that I'm going to have a $976 credit every month for health care? However, at the end of the year, when I file my taxes, and for you at the end of the year when you, what's the word I'm looking for? When you settle up or analyze your year, you then can make decisions with that money. Just like, again, at the end of the year, if my income was more, then I would have to pay some of those credits back. Reconcile. I was looking for the word reconcile. My goodness, it's been a long day. So it's through that reconciliation process then, I would then release those funds. Either, pat yourself on the back and maybe spend some of it for fun. Maybe put some of it in an emergency fund if you don't have your emergency fund where it should be, or you want it to be more. Or if you don't want to put it into savings, you could put it into your investment vehicles, as I mentioned just a minute ago, to backfill your 401k if you have one, or perhaps put it into a taxable account as a lump sum rather than dollar cost averaging throughout the year, because again, you need it all 12 months to reconcile in the case of flexible income. So there you go. That's what I had for you guys today. I hope you enjoyed this episode. Thank you again for writing in to the show, the person that had that question. If you guys like content like this, give me a thumbs up. Consider subscribing. Also, email me at evanthomasbroke@yahoo.com if you have a question